episode 178 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at how to trade using Heikin Ashi candlesticks. Heikin Ashi candlesticks are really good because they smooth out the price action and help us get into a trade. So let's go on to the charts and take a look at what's the best time to enter this type of a trade setup, where to place our stop loss, and as always, how to exit the trade with a profit. Let's take a look at how to use Heikin Ashi candlesticks to stay in the trend. So here we have Heikin Ashi candlesticks chart here. These are slightly different than your normal candlesticks. The main purpose of using Heikin Ashi candlesticks is because it helps us stay with the trend. So what you'll notice is when using Heikin Ashi candlesticks, when the candlesticks, the top of the candlesticks does not have any pins, that means the candlesticks are strong. So when the price is moving down, we want all the pins to the downside and none on the top. And when price is moving higher, we want the bottom to be smooth and all the pins need to be on the top. So when we get candlesticks that have pins on both sides like this one, that means price is not trending at the moment and really there's indecision in the market. So those are the ones we want to stay away from. So in this case, we have the support resistance area over here. Price has been dropping. It pulls back into the support and resistance area. And then what we are looking for is change of color. And I like to get two good candle closes here. So as we can see here, price is just going sideways. It hasn't really done anything. And once we see the price bounce off of this level once again, and then we also see that price closes below our pivot point, our daily pivot indicator here. So we have a combination of support and resistance area, change of color in our Heikin Ashi candlesticks, and we have price closing below daily pivot. Now we have three different items that provide us confluence and show us that this trade will be a high probability trade. So once we get two candlestick close in our direction, we take the trade short. This is where our entry would be after the two candlesticks close here. And we stay with the trade for as long as candlesticks are red in color. So we stay with this here. At the end of the day, we see that we have one blue candlestick, but we're looking for two solid candlestick closes. So we just stay with our trade and we can trail our stop behind these previous candles so that our stop is not too far. And we stay with the trade here. As we can see, price goes into red again. Here it tries to change to blue, but we don't really get any continuation on that. So we stick with our trade. Same thing here. We get one blue candlestick, so we don't do anything. And finally, over here, we get two blue candlesticks here. So this is a good time to exit the trade. So from entry to exit here, we get 96 pips in the trade. And then there's an opportunity to enter the trade again. So we see that the price actually starts turning red, but it's going sideways. So we don't really have any solid red candle closes. These are very tiny candles here. Then as price drops below the support level here, we see the candles get bigger. So this shows that there's momentum in price now. So after we get two solid candle closes here, we enter the trade short again. And then again, we stay with the trade for as long as price is red here. We are seeing red candlesticks. And then as we can see here, we see two blue candlesticks. So now the second candlestick here is a solid blue candlestick. So we can exit the trade again. So from entry to exit here, we get 68 pips in the trade. So between the two trades here, we get 164 pips or $1,640 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. If you liked this episode, please feel free to subscribe to the channel and share it with your friends. I'll be back with another great trade setup next time.